Thank you, guys. This is Mamboa, your future CFO. Thank you for coming back to my YouTube channel. And together, we got a Broston. Today, we're going to be looking at analyzing the balance sheet, that is the statement of financial position, together with the income statements, the different ways you can analyze for maybe segments within the organizations, subsidiaries within the organization, which are of different sizes, to get to know which subsidiary is doing better. To get to know as an organization, how are we performing compared to a prior period? So with that said, and without much further ado, let's dive in, guys. Let's do this together. So the first form of analysis that I'm going to be looking at is the vertical analysis. And when I talk about vertical analysis of the income statement, I'm looking at, I'm using the sales as my base. I want to know, as a percentage of sales, how are we performing on different lines, items within the income statements? How are we doing analyzing each item as a percentage of the sales? So our sales gonna be the base, and that this is vertical analysis, where we analyzing from top to bottom, where the sales is our base. So this is what we're gonna do. We want to know how our GMT organization is doing. So sales, our sales is 1.8 divided by the same figure, divided by B5. So sales is gonna be 100%. And I'm gonna show you how we can do this very fast. So we're gonna fix the sales figure because everything is divided by sales. So we put a dollar sign before on the denominator, which is the sales. Then we're gonna drag down, then we get to know how this organization is performing. So when we look at our COG, it's 80% of the sales. So our gross profit is 19.4% of sales. Selling expense is 2.8% of sales. General expense, 0.8%. Our operating income, 15% of the sales. Other revenues, 1.1% of sales. Our EBIT, 16.9% of sales. Our EBT, 16.4%, and our net income is 9.8%. So as an organization, our net profit, the bottom line, is 9.8% of the sales. So we can do the same for the prior period, so that we are able to compare. We are able to know how we're doing better as an organization. Because by just looking at this at the sales, you can see how our sales have grown. What about our net profit? Has our net profit grown from one period to the other compared to our prior period when we base it on sales? So very fast, we do the same, divided by the same figure, which is the 5. We're gonna fix it, then we drag it down to get to know how we're doing as an organization. Okay, very fast, we pull this down, then we get to know exactly what we're doing. Our COG prior period was 83% of sales. So there is, we can call that a significant decline given the percentage increase in sales. So there is a 80%. Current period is 80, prior was 83. So our COG has gone down, which is good for the organization. So we are able to make more of the gross profit. Our gross profit has grown from 17 to 19. Let's look at our operating income. Our operating income has grown from 14 to 15.8. Another thing you need to do is you look at your expenses too. Our sales have grown, and also our selling expenses has grown. We need to know, is the growth in sales expenses attributable to the growth in sales? If not, what can we do as an organization to reduce on our selling expenses, which is better for the organization? At the end of the day, we're gonna be making more money, more profits. Our EBIT has grown from 14 to 16.9%. Our EBIT has also grown from 13 to 16.4%. Our tax has also increased. We know tax is based on the EBIT, so that is expected because our EBIT has also gone up. The net profit, prior period was 8%, current period is 9.8%. So you are able to analyze with different sizes, the different percentages of the different line items, then you are able to make sound decision. So that is our vertical analysis with sales as the base. So let's move on, do the horizontal. Horizontal, we're doing across. This is from one period to the other. And in this period, I want to use the prior period as our base. So everything will be expressed as a percentage of the prior period. So everything in the base period is 100%. Then now you express the current as a percentage of the base. So our sales, we want to see how our sales have grown from one period to the other. So our sales currently is 1.8 of 1.5. So and this one we need to make it a percentage so that we are able to compare likes. So I need to make this as a percentage. So the number format, this is a percentage, and I want it as no decimal places. So this is 120%. So our sales have grown by 20% from prior period. So we do the same for all the line items. This is the reason why it's zero, because here it's not okay. We don't have a figure here. So our COG has grown from 100 to 116%. Our gross profit has grown by 40%. Our selling expenses have grown by 43%. Our general expenses by 25%. Our operating income, 140 of the base here. Our EBIT is 150 of the last reported profits. Our EBIT, it's 154 of the prior period. Our net income, 154% of our income. So here you are able to analyze, you're able to know exactly what is happening to the different line items in our income statement using horizontal analysis. What is the percentage of the current period based on the prior period? That is what we call the horizontal analysis. So very fast, let's jump over into horizontal analysis. The second analysis, which is change from one period to the other. Here we gotta be using the growth from one period to the other. For example, we have the current sales at 1.8 compared to 1.5. in the prior period. So our sales have increased by 300,000. So we're gonna first get the growth, then now we get the percentages, the percentage growth in the different line items. So the growth will be, the percentage will be the growth divided by the prior period, which is our base. We are basing everything on prior period. And I need to see this in percentages to know exactly what is happening. So I'm gonna change this into percentages. Okay, there we go. We got it, guys. As a percentage, I want to see the growth. So again, this one is because we don't have a figure in one of the periods. So our sales have grown by 20%. Our CAG has grown by 16%. Our gross profit has grown by 40%. Our selling expenses have gone up by 43%. So we need to know exactly what is happening. Our sales have only grown by 20%, but our selling expenses by 43%. Why? We need to ask ourselves why. And these are some of the management by exceptions, including the variance analysis that management do to know exactly. We need to dig deeper and know exactly why our selling expenses are increasing at that higher rate. Our admin expenses have grown by 25%. We need to know exactly what is happening there. Our operating income has grown by 40%. You know, when we see income growing, everyone is happy. Huh? But let's also look at the expenses. Our EBIT has grown by 50%. Our interest expense has also gone down by 17%. Maybe we've paid off some of the debt. Our EBIT has gone up by 54%. Our tax has also gone up by 54%, and our net income, 54%. You know, when we see income growing, everybody is happy. So it's a good thing. But as I said, we need to dig deep and know exactly what is happening to ourselves. Are we reporting all the incomes? Why is our selling expense so high? Because it's a red flag. We need to check exactly what is happening there. What is happening with ourselves? Are we advertising more to increase sales? Maybe that could be one of the reasons why the selling expenses is going up. So basically, guys, that is our horizontal analysis tool. And we use these kinds of analysis to know, to analyze different sizes of the organization, or maybe the performance of the organization vis-a-vis a competitor, or maybe the industry, which is the figures are slightly higher. So just looking at the figures, you can know exactly what is happening to your performance. But doing a common size, reducing everything as a percentage of maybe your sales, as a percentage of you of one period to the other, you're able to know exactly what is happening to the organization. So that is the different analysis of the income statements that you can do to get an insight on the performance of the organization, and also compare it with the competitors' performance, and also with the industry performance. Then you're able to make better decisions as an organization. I'm going to move on now to the analysis of the balance sheet, the statement of the financial position. And we're going to be doing the same on the statement of financial position. We want to know the growth. We want to know how are we doing. What is the percentage of cash and cash equivalent from one period to the other? So when we're analyzing about the balance sheet, it's a little bit different from the income statement, because our base is the total assets, the totals. that is our total assets, and also which is the same as the total liabilities and equity. So when we look at our cash and cash equivalent as a percentage of the total assets. Okay, just a minute. I need to put the dollar sign before these numbers to fix them. Then when I do that, this is gonna be 100%. And I want to see these numbers as percentages. So I'm gonna change the number format to percentage. That way I will be able to know exactly what is happening. Good. So looking at our balance sheet, the statement of financial position, my cash and cash equivalent is 9% of the total assets. Marketable security, 6%. Accounts receivable, 14%. Inventory, 17%. Prepaid expenses, 3%. Non-current assets, 60% of my total assets. When I move on to liabilities, my current liabilities are 17% of the total assets. My non-current liabilities, 36%. Total liabilities are 53% of the total assets. But sorry, the common shares is 17% of the total assets. And my retained earnings are 19% of the total assets. I need to do the same for prior period to be able to compare from one period to the other. Here's a percentage of the total sales. I need to fix this so that we can get, so you fix by adding a dollar sign. Then I need to see these as percentages. So I'm gonna change this, the number format into percentages. And I want this to be 0.0%. Okay, our cash and cash equivalent. Prior period was 8%, current period is 9%. So our cash and cash equivalent has grown by 1%. Marketable securities was 3%, current period 6%. So we've doubled our marketable securities. Maybe the interests are good. We are earning more interest income from the marketable securities. The accounts receivable, current period was 12%. Now they've increased to 14%. Why are the current assets increasing? We need to look deeper and know, do we have past due accounts receivable, which we need to really follow up like soon as possible, because we know the longer accounts receivable is outstanding, the more the credit risk. Inventory has gone down from 9 to 7%, which is good. Prepaid expenses, 6%, prior period to 3%. It's a good sign. Non-current assets, they've reduced from 61% to 60%. Maybe we've disposed assets that we didn't need. So Hashedi will be able to explain what is happening to our current assets. Maybe depreciation could be the reason we've depreciated our assets. But looking at the figure, just looking at the totals, our current assets have increased, but looking at them as a percentage of the total assets, the percentage has gone down. So Hashedi will be helpful in this case to get to know exactly what is happening to our non-current assets. Current liabilities, our current liabilities have increased from 16 to 17. Maybe we're not paying our suppliers as expected. We need to look into that. We are adhering to our policy on payments of liabilities. Our non-current liabilities have gone down. which in turn is gonna reduce our financial leverage. We're gonna be paying less interest. So it's good for the organization. Our shareholders' equity, this was 19% of the shares. When you look at the numbers, they've not changed, but the percentage has grown. Other assets has grown, but shareholders, the common shares equity remained the same. Retained earnings, this has grown from 25% to 29%. So our income is growing, which is good for the organization. We need to see increasing profitability. We need to see, as an organization, we are retaining more of the retained earnings. What is our dividend payment policy as an organization? Maybe we pay the residual after we've invested because we want to maximize the returns on the shareholders. So as an organization, we need to know how much we should be holding on retained earnings, because this is money just sitting in the organization. How can we invest our retained earnings and generate more returns to our shareholders, which is good for the organization? So basically, guys, that is the analysis of the balance sheet and the income statement. The balance sheet, you can also do a change from one period to the other, just the way I showed you with the income statement. You want to know our cash and cash equivalent has grown by what percentage, but that will basically be our column 2 minus the prior period, the changes. So I won't be doing that for now because it's basically what we've just looked at. And I hope you got this clearly. I hope you got me. And together, next time you analyzing your balance sheet, your statement of financial position, your income statement, you're better placed now to know how to go about it. If you're presented with information for organizations of different sizes, you're now able to analyze and know how each organization is performing. Maybe if you have divisions within the organizations of different sizes, you're able to analyze and know exactly how each division is performing, how each subsidiary is performing. Thank you for your time, guys. Thank you for staying with me all the way to the end. Together, we're gonna go far, guys. Thank you so much. Thank you for your time. Thank you for everything. I'm just sending a lot of love. And don't forget to subscribe, to like, and also to comment. Tell me what you wanna hear me talk about in my next video. And boom, we're doing this together, guys. We're growing together. Thank you for your time. Thank you, and be blessed.